Alright guys, this is going to be a bit of an awkward angle, but we'll see how we get on. So what we're trying to achieve on the investments, well ideally I want 1,000 in like the Vanguards, let's just call them the funds. Keeping it simple, simply because there's different types of funds. You've got some that are bonds, different markets, etc. But they're managed funds predominantly, so there are other people are managing them for me. So I find that they go up by themselves anyway. Um, the market by default goes up by about 10% per year. It doesn't mean it's going to go up 10% every year. What happens on average is 10%. Now, with the funds, that's going to track pretty close to that as far as I'm aware. I've actually had 13% for nearly the last 3 years because I've been in it, 2.5 years now, and it's working out about 13%. So the funds themselves on this 212 account, there we go, 212 account, I want 1,000 on the funds, because the reason being is I want to be able to show what the fund's doing. Then we'll have 1,000 dividends, which are the ones where at certain times of the year you get some money out of the stocks. So for example, the real estate one I've got on there pretty much pays monthly. Some of the others will pay quarterly, some will pay annually. But the point being is, this fund, we can compare that with that based on 1,000 on the investments. These are going to be more traditional investments, such as pension funds, Johnson & Johnson, Procter Gamble, Pfizer, Coca-Cola, Pepsi, all those sorts of stable investments. Not exciting stuff, not high risk stuff, so that we can compare the two and try and get that somewhere near. This is why I put some of them outside by mistake, the initial investments, which means we're going to have to put more money in unless I can work out, because I really don't want to sell it and sell it to put it into the fund and then have any additional costs, because money's already in it. So I might have to do it, put extra cash in, which I don't mind doing. I really don't. Then I'm going to put 1,000 in what I call risk. Now, risk is going to be things that are moonshots, but not stupid. Now, what I mean by that is I'm not buying penny stocks assuming that somebody is going to have a massive jump just because it's only costing 10 cents a share. A good example of cheap ones where, for me, it appears worthless is sustainable housing. If you look at some of the stocks out there, I'm keeping it vague, so because I don't actually want to stop people investing if they want to invest, but I'm going to give you my logic on it. I've spent time in Asia. I've understood the way NGOs work and the mentality, and they're often not money driven. The money, they believe ethics is far more important, but their version of ethics is unethical when you're using other people's money. So my point being is, let's see, get the chair a bit higher, because I seem to be ducking, but I can't get my head and this is in the same screen. But the point is, eco housing. There's some stock in there where they're in countries that are developing nations. The housing will be low cost housing, which means the priority is about ethical. It's about creating housing in environments overseas. The weird thing is, as somebody who spent time in Asia, locals know how to build houses. So I'll leave that one there. The point being is, although it sounds like a great idea, and they'll pitch it as something wonderful, bringing new designs, whatever, to wherever they're operating, because it's not just in one country. Reality is, locals know what they want. A lot of the houses and designs are done for things like natural ventilation because they can't afford things like electricity. So it may look good on paper, but the practicality of it is probably going to need government funding. It's got to have government support because to get the contracts and whatever to be able to allow the build. It's going to be riddled with corruption because that's one of the biggest problems in developing countries. So the business on that, all ethical, heal the world, save the planet, all that sort of stuff, I very much doubt I'll make any money. So that's an example of something that you'll look at and think, oh yeah, I would love to be involved in that. And as a person, it's a good idea. As an investor, terrible idea. Now, in comparison, you're looking at Tesla is going through their sustainable housing, which I suspect are hitting the market late, probably, I expect end of 2026. They're going to be low cost, but high value in the sense of solar panels, etc., etc. It's designed for a different market. It's a market with some money, not giving it away or whatever. It's a market with some money. It's also people that have already bought into things like Tesla cars and stuff. So their market is there with people with cash. Completely different to people with no cash. And that's one of the things I want to say. You can be led ethically down the wrong path. So I do see growth is still there in Tesla. I also look at Tesla's robotics. That's here or there. But bearing in mind, we only see what we see. Suddenly you get something in from a curveball coming from the side that nobody's watching, it will spike the Tesla values. So I still see Tesla as a valuable asset. If you look at Apple sits in these dividends as well because Apple does buybacks and stuff. So Apple's already in there, Tesla's already in there. But these, for spikes, I'd say Tesla's got some spike left in it. Microsoft is another one with crazy growth, but I know they've had some stupid decisions lately around their Xbox and things like that. So I still see Microsoft having growth because they've done a lot of stupid things for many, many years and still done well. So I still think there's growth in Microsoft. Pharmaceuticals, there's growth in it because you've got three markets going on at the minute that I think are key ones. Like cancer drugs, anti-cancer drugs, weight loss, and things like insulin and weight control. What's the difference between weight loss and weight control? Well, insulin, and that whole diabetes piece is tied with people's diets. So it's dietary. Let's call the third one dietary. That's easier, isn't it? Because dietary, weight loss, and cancer treatments. I think those are three key ones, which is where when you look at Eli Lilly, Pfizer, I'm not sure what Moderna are up to, but they've probably got something else in the pipeline. But I got some free Moderna shares, so I've kept it. But I'm hoping Moderna has something else in the back burner. But I'm not particularly bothered because I can see Eli Lilly and Pfizer doing quite well. Same with Procter Gamble. So as you can see, they're very low risk. They may spike, but may not spike. But the risk is that money may just sit there. That's that risk. I haven't lost money. That'll just sit there. If it doesn't boom, or they have some minor growth or minor dividends, it would be as creative of just leaving the money in one of these 2% bank accounts. So that's where this one I'm going to have to do a bit more thought on it, because I'm going to have to go through the many different assets on 212 and pick some things that I can see logically being worth looking at an investment. And it's not always simple as well. Like I said, I'm reading, where's the book gone? 2 seconds. See, I'll get the book. So here's Rule Breaker. So I do actually have the book. Rule Breaker Investing by David Gardner. One of the ones he did as a hot pick was Starbucks. I hate Starbucks. I don't see the point of it, but that's me. I think it's a weird substitute for the decline in the pub industry. But the point being is that's had significant growth. Is that sustainable and going to be ongoing? I can't see them developing anything new. So it's not a stock I would hold personally, because I think it's already grown to its point. McDonald's has got a lot of real estate. McDonald's could pivot into other bits and pieces, and it does pay out in its dividends. So McDonald's, for example, will sit in here, dividends. It's not going to do a moonshot because I think it's trying to be your best friend, and the best way to be a best friend is don't change things too much. So I think that's where that's useful. It means that it will sit there, but I'm not expecting it to do anything fantastic. Now, you're probably thinking, Matt, I'm getting a bit bored. You haven't actually given us any risks. Well, the risks at the moment, I think, are going to be around, for logical ones, Nvidia. I may get some of the spelling wrong, by the way, because I'm trying to do two things at once. Well, three. Write, speak, think, all at the same time. Nvidia has had a few jumps. Nvidia currently hasn't really got anybody that's threatening it in its market. With the AI, I can see that maintaining growth. Don't get me wrong, don't be over-egging it, because I think the guys behind ChatGPT, what's theirs called again? I forget the name of them. I think they're over-egging their piece. So I don't see ChatGPT's sort of founders and whatever meeting what they're looking at. If you have a look at some of the recent media, I think they're going to struggle. Nvidia, I think these are the guys that sell the shovels and the pickaxes and the spades during the gold rush. I can still see growth on that because the market there is primed for it. Also, if we start getting other alternatives, for example, if we start doing more with robotics and other things that need their processing power, they could jump very quickly with some new technology, reducing the size or whatever. I can see there's a lot of growth in Nvidia. Where I've seen a bit of risk, and I'm interested to see where it ends up, is people like Nike. Nike, I think, is high risk. Nike's high risk simply because of the way it destroyed its own business model. Because it used to be more orientated around people that were like their resellers and type, like smaller networking piece, and they decided to destroy that for some reason. And they seem to be more geared towards being more of an Apple, which didn't make any sense to me, and obviously didn't make any sense to their stock values either. So Nike, I think, has got some recovery in it, but it's one you've got to keep an eye on and see where it's actually going to head, because what is Nike? Nothing more than a brand. That's it. Nvidia is technology. Nvidia produces things. Nike, I was going to say sweatshop, shouldn't I say that? Their products are nothing more than a logo. That's it. It's the rock with a face on it. You can change its name and it's still the rock with a face on it. So the point being is that may recover, and it's got the money to recover. It's whether it actually gets good enough leadership to make it happen. Who else will I recommend? I think there's some gaps in the market that are going to come through quite quickly. What's the biggest problem in renewable energies? The answer is batteries. Renewable energy is all right having all these wind farms and everything else, but it's the storage. this will impact the automotive industry, this will impact the renewable industry, the power industry, once some of these new technologies have reached their goals. There's salt batteries out there, there's iron batteries, there's other technologies that are coming through, but the only thing to be aware of is it's high investment, slow payback. So the only growth in that realistically is catching it on the way up, because it'll go up and then I think it will sort of tailor off, because once it's investing, it's got a long payback period. And then the other problem is somebody comes out with something better while they're still in their payback period. So batteries are something that's moving. Things like salt batteries, also technology around hydrogen. It's not that far away, it really isn't. I would say hydrogen is probably going to be more stable than solar over time, for energy, but we'll see where that ends up, because it's still early days on hydrogen. The other one that we're talking energy, I was just thinking of another one that's worth looking at. Batteries, hydrogen. Yeah, there's a big thing in Germany at the moment which are called balcony solar. They're basically solar units that you hang over your balcony. It comes with the inverter and everything else. You just plug it into the wall and you socket, and it feeds electric in your house. Simple to install, simple to find space for. I can see that growing. So it's looking at the manufacturers on that. That may be a market that's interesting. You probably noticed I haven't talked about arms and things like that. The reason for that is I think we're in a weird position now politically, because a lot of the growth would have been with the conflict of Ukraine and Russia. So a lot of the EU growth would be tied with that, along with the US growth, because at the moment there's not really any build-ups. Don't get me wrong, we are talking about growth in the rearming of NATO, etc. But at the same time, a lot of that stuff happens, goes in the back burner, gets down to scale, change of government, budget changes. So it becomes a bit of a peacock feathers. It's all there, but it may not actually happen. So that sort of stuff, I sort of keep the arm stuff out of there. Let's wipe this out a bit. Start again with a few other bits. So for me, I'm looking at Nvidia. I'm not expecting any sudden growth. That's why this money here is earmarked just to sit there. I'm not. So for myself, I will be doing Nvidia. I will be doubling down on Pfizer. I always forget how to spell Pfizer. I might get it wrong. Pfizer. Eli Lilly. Eli Lilly's took a hit recently, by the way, because the price in America. I think I've already discussed this anyway. But the fact is, if your drug was $100, you've only got this amount of people that are buying it. If that gets dropped down to $10, the supply and demand dynamic changes, the profit levels change, in the sense of maybe you're getting 1,000% per drug to getting 50 times the drug cost. I think the manufacturing will change. So although that's took a little bit of a hit, I don't think it's long term, because I think the quantities of sales will go up. Because it's their weight loss drug. That's the one to keep an eye on. But I'm saying, monitor this stuff yourself. A lot of this stuff is not hard. It's just having enough time to read it. Pfizer, I think, is going to hit something big with the cancer drug stuff. That's why I'm going to put something in there. The other one I look at is what's another thing that medical could be working on. That's a big hitter if they actually solve the puzzle. Alzheimer's, Parkinson's. So it's researching who's close to actually finding a solution for some of that stuff. Autism. There's three things there I've just given you that is worth researching because they have a massive impact if somebody actually cracks it. And you probably think, yeah, but man, that could be 10 years away. I know. That's what the risk. I'm not being funny though. I'd rather stick my money into somebody that help cure Parkinson's, Alzheimer's, autism, etc., than into arms. Can't be ethically old-fashioned. But the fact is, there's moonshots still in these guys because they're not a, what do they call it? One pony. I always get it wrong. Is it one horse race? One horse race, yeah. And there's another one for ponies. Put it in the comments. Let's forget it. But the point being is, Nvidia has got growth. The AI market is growing now. If you look at the cost of the average gaming PC, what is one of the biggest costs in that bloody machine? It's the graphics card, because it's doing a lot more than it used to be. It's almost like its own little computer these days. So the fact is, that's got growth. The other one I would recommend having a look at is anything around the microprocessing side. There's opportunity and growth in there. Because you used to have, what's the name? Oh, you know what? I forgot the names off the top of my head. I used to be into this a long time ago. Because you used to have the Intel. It used to be Intel and the other one that begins with A. Forgot it off the top of my head. It's worth looking at what they're working on because they're the other layer. And you've got to look at what chips they provide and will they fit into Tesla's robots? Will they fit into something else? Is there something else that we're not seeing yet? Join some of the dots together. Because the guys from OpenAI, if you have a look at what they've done recently, there you go, OpenAI is the ChatGPT guys. See, as soon as I stopped thinking about it, I knew who they were. Look what they've done to some of the other stocks by some of the stuff they're up to. That's the dots you're looking for, ahead of the curve, so that when you see something, invest in it and you'll get that moonshot. The other side of that being is, there's two ways of doing this. There's speculation and there's investing. So for example, with Nvidia, when I buy it, I'm probably never going to sell it. Because quite simply, that's just going to keep growing. It's dominating its market. It's not like Nike. Like I said, Nike's a brand and they destroyed it. You've got a name, that's all you got, and you destroy it. Doesn't mean Nike's gone. It means Nike needs somebody that can reshape that business and get it back on its pedestal. I think it's lost its way a bit at the minute. But Nvidia is driving stuff. It's got its own AI stuff going on. It's got its graphics cards. It's got its buy-in from others that are using its technology. Nvidia is going to be there. The drug trade, Pfizer, Eli Lilly, Procter Gamble, etc. They've got technologies in there that they're working on, solutions, and they're looking at big problem solutions. Because you just got to look at Viagra, not literally, but Pfizer. Look where it came from, like that. You know, massive jump in stock value because it solved the problem. So what's my core beliefs on this? This is the same even if you're doing a startup or looking at taking on an enterprise or working in business and trying to make something more efficient. You start from the end user. I think even Steve Jobs understood this, which is where he sort of conflicted with some of the more engineering background, because the end user is the important bit. This is probably more around like what we call today product management, which is another. It's a course I've done, but it's the whole thing as a product. So it's the outputs, but at the same time, what we're looking at is what the end user experience is. What is it that will make this better for the end user? So when you're looking at AI, NVIDIA's tied in there. If you look at ChatGPT and OpenAI, I think, although they've got massive growth there, I do think there's opportunities to go in different directions. If you start delivering a home-based system where you're not having the sales as a service nonsense, your SaaS, I think there's opportunity to be delivering AI at home and you control it. I'm not going to go too long-winded on it, but if you look at Llama, Llama, and how you can set up on your home computer, and how you can set up your own AI server, and how you can utilize some of this stuff, the technology, the shovels, the spades, the pickaxes are far more valuable long-term, because the online version, which is very censored, very controlled, very manipulated, compared to something you can build in your home and educate it properly. I've got to admit, I use ChatGPT a lot, and I see it as so political. The way what whitewashes stuff and stuff is just wrong. I actually try to educate it, even tell it I can't educate you because you've been pushed down these narrow avenues. So even if I feed you knowledge through education and books, there's not my stuff, but actually historical, you're never going to use it because you've been programmed not to. And ChatGPT agrees. So the point being is, when people catch on to that, because at the moment, writing your emails and things like that is one thing. But for example, say you are dealing with contracts and you've got thousands of contracts, you're a legal firm, you're a commercial enterprise, you're a building company with all these different documents. You know, you do a construction job and you've got 50,000 different documents for everything from the fire alarm system to the documents for what socket was used, to door handles and door schedules, etc. And all these different contractors just give you stacks of documents, and they're often not organized, they're not broken down, they're not categorized, etc. Throw it all into a office-based AI, which is yours, so it's a secure server. It could reorganize everything for you. It would just suddenly go, socket, yeah, that's an O&M for a socket, put that in the electrical, under this, blah, blah, blah. Saves it, renames it, and suddenly it's all organized. You're not spending 6 months trying to reorganize other people's mess. That's where that open AI, ChatGPT stuff doesn't work very well. Because A, too much data, and B, too much sensitive data. You need that stuff offline. But anyway, there's where I could see this taking off, when somebody actually develops an AI, which they're close to. I'll be honest with you, if you look at some of the stuff out there, there is already mini AI systems coming out, because people do face recognition, or I think they're missing the big picture. I'm not interested in face recognition. I don't use that. You know, I'm interested in being able to throw at contracts and get it to come back and highlight the contracts for me for and against. Bang, just save me 200 quid on a lawyer or a commercial manager. So there's other things in there where you can see other perspectives and other opportunities. Now, 212, I keep looking for my phone, but it's here, has a lot of stocks and shares on it. I would say avoid the penny stocks, and I know this will be famous last words. because somebody else suddenly go, well, I picked these ones and it went amazing. And it's like, yeah, good on you. But this is my risk. My risk profile is based on logic that suits me. These are already big names. I will go through and look at other things that have opportunities. See, Rolls-Royce is something I've got shares in at the minute. That was another. Was that a free one or did I buy it? I bought Rolls-Royce because of its dividends on there. But that speculates. It goes up and down like crazy. But the other thing with Rolls-Royce is a problem with engines at the moment, aviation engines. So maybe there's more demand because I think Boeing's got the problem. So maybe there's more demand on Rolls-Royce engines coming up. I don't know, but this is the whole point. So this is why stocks and shares get interesting. Is when you start looking at the bigger picture. It's not just worth £2 today. It went up 14 pence. Why did it go up 14 pence? Because it's seeing stuff before it happens that matters. So yeah, so I'll take this out for now. So as you can see, I'm going to put £3,000 in this bloody little game we're playing. Well, lucky enough, we're nearly at 700, so nearly the first 1,000's in there. So what's my point on all this? Well, an important bit for me is I want to show it's possible to do this, because I know the first argument I'll get out with people is, I don't know how to do it. And I do that face because it irritates me that people automatically defeat us. If you stick them in funds like Vanguard, etc., they manage it all for you. You're literally just throwing the money in there and go manage that for us, governor. And they go off and do it. And then you just log in now and again and see how it's doing. Dividends, the same. You'll see it moves very slow because some of them are annual dividends. So you may think, oh, there's no money in there. But it's when the dividends come through. And then it compounds and goes back through, and it takes time. It's much slower. The reason I do dividends as well as this one is I think logically dividends will do better in a recession. So this is my backup plan, dividends. So the more I try and keep it spread, so it's more equal. So for example, say I got a run on here, I may take some of that out and spread it back across the others, or I may just keep it where it is and just to show how quickly good picks or bad picks can grow against the other two. We'll see how we get on. But one of the things I hear from a lot of people, which don't swear at, is they think it's too late to invest, too late for their pension, too late to retire, I'm going to work forever, all this crap, utter crap, guys. The reality is, you've got to be disciplined, and that's it. So, at the moment, my dietary has changed. My takeaways have stopped. I mean, I've got to admit, I do spend up to 200 quid a month eating out easily. So that's going straight into this now. So, I'm cooking more healthy. I've got stacks of smoothies that I've bought, and because I've been back to Spain, I haven't used, so I've got a lot of good stuff. But ultimately, I want to show this is possible. I'm going to give you a couple other little bits in here, because I'm in my 50s. I'm not working until I'm 67. The government can forget that one. So what I've got at the minute, just put some numbers down here. I've got about 65k in a private pension. Annually, pension contributions about 10k. So this is growing. This is growing. In another ISA fund, it's about 20k. At 67, state pension. Now, that looks good and bad, depending how you see it. See, some people say, well, you should have 300 grand in your pension fund. I was overseas for 12 years. I was enjoying life. I didn't wait till I was retired to go and try and travel the world with sciatica and arthritis. I did it first. So this looks quite low, but I'm going to grow that at 10k a year. Because that's basically how much I'm paying in annually. So I also have an annual bonus, which I can't really discuss, but let's just say you'll probably see it in the funds later, once that starts coming through, because I'm still in the first year. But the point being is, what I'm looking at is showing how I get from A to B, because my pension funds are light, and I know some of you twats are going to go, no, it's not, I've got more than a private pension. So, and I laugh because I was exactly the same place you are a few years back. It's because my focus has changed, because bearing in mind, when I come back to the UK and Europe, my focus was to get the house and get the house paid for and get that focused so that that's stable. We've done that now. We've done that. And I know this is far better than most people in the UK, even though it looks lower. Why? Because a lot of the money that people have is fictitious. It's valuations on property, on debts they're still paying. This is cash. This is real cash. My mortgage is around £40,000. That's all that's left now. And I've stopped paying it to put the money in this because, well, let's scrape this out a minute. So say my mortgage is 4.5% interest, yeah? It's lower than that, but say it's 4.5 interest. That's all of it. Because they do like splitting it up, don't they? Say, oh, it's like 2%. And you go, well, what's that then? And then there's other hidden costs in there. So 4%, 4.5% interest. I'm expecting these to perform at 10% upwards. So, yeah, I'd be an idiot to be paying my mortgage early. Because ideally, what I actually want to do is run these for 12 months. And then I might actually want to turn around and just take 5% profit out, which isn't a lot of money in these small accounts, and then put it on the mortgage. So you get a small reduction just on the interest. But it's very likely it won't come out of this fund anyway. Because what really happens is I don't take any of that money out. I reduce the growth. So for example, the ISA that's at 20k now is growing at 2,000, what would that be? 2,600 a month, 2,600 a year by itself. So if I took 600 a year out of that and just put it on that mortgage on top of my monthly payments, the mortgage comes down quite quick. And the 600 doesn't cost me really real money, shall we say. But very likely I'll leave it in the ISA, and at the same time we'll just stick an extra 150 quid a month. Loose money. What I call loose money, it's money I don't spend on takeaways and stuff. It's the money I get to the end of the month and go, you know what? Got 300 quid left in the bank. I'll ring Mrs. up and say, stick 150 on the mortgage. Because I feel better when the numbers coming down as well. With debt going down, profits going up. That's what you want. That's the ideal. So where was I getting to? Right, so most people in the UK have got debt. They've got these things. This is all fictitious. This is where They lock people's money into properties. They value property at its current market value. It's not a real value. Oh, should we do this? I'll do it quickly, and I'm not going to put any numbers to it. So say your house is 350 grand. And Matt, see if Matt can write. 350k, right? Council tax. Water. Electric. Maintenance. Refurbs. Those numbers don't get factored in. And I know someone's going, well, you'd pay council tax and water, electric anyway. I'm an HMO. I don't pay any of those. I don't pay any of those at all. But the 350k isn't 350k, is it? What's the two big ones that are tied with your mortgage? Well, sorry, the house. Mortgage. Insurance. Times 2. Because you have your contents insurance as well as the insurance for the house. So it's not really 350k. And how much interest do you pay on that mortgage? Do the maths yourself. Matt, you're bloody doom and gloom, you are. No, I'm just saying houses are told to you that they're a good investment. They're not. Go on then. Matt, you own a house. You're a hypocrite. I paid 135,000 for mine. It's currently worth 220,000. And I hammered the mortgage off as quick as possible to reduce my payments. So, yes, I agree. I'm a hypocrite on that side. But at the same time, I hammered it down to a point where it's cost me about £300 a month now for the month. It's something that gets transferred to my wife and kids, well, to the kids later on, so I can avoid the inheritance nonsense. In the UK, I think you've got 10 years now. 10 years. So I've got to predict before I die. 10 years. And I think in Spain, they actually see it as a transfer of wealth. There's other hidden taxes, so I've got to be careful how I do it. But at the same time, it's the house, it's the home, it's ours. These pieces are all part of the bigger puzzle. And I'm going to explain why, right? Because I gave you the negative bit, right? I gave you the negative bit, which is houses are a bad investment if you're just living in it. If you rent it out, it changes. Or you bought it cheap and the values increase significantly, it changes. But not as clear cut because there's extra taxes if you sell the bloody thing. But a little thing I did this month as well. If you've got a Revolut account, you can invest in the Vanguard fund. Just have a look. You can invest in it if you want to. So this month, I opened a fund on my wife's phone. It's a Vanguard fund. And it's only got €30 in it. Why? Why did I do that? Why did I stick €30 in my wife's investment fund that she hadn't used before? Conversation this morning. It's gone up 40 cents. It's visual. She's seeing it works. She's seeing a change. It's like, it's gone up 40 cents. She wouldn't have done that before. She wouldn't have thought about opening the account. I've just changed the way she thinks about money because she's now seeing it. And she's seeing that €30 is now €30 and 40 cents. It's a little thing. But all of this ties to it. That's why I start with these numbers, 1,000, because they're round. There's something I can aim for. I can't say 100 because we've already got more than 100 in each one of these. so what we've got to do is do 1,000. I've got to move up to the next level. But the point being is, investing can become quite addictive. And if you followed me and Jay, you mostly probably didn't. When I did the crypto markets, I'm not saying when, which markets, where I was, or anything like that, for tax reasons, but I wasn't in the UK, so I didn't forget about it. I started with $400. A year later, I took out 110,000 euros and 6,000 euros for that Astra car I had, profit. And I'm not talking about anything else in there because I've left the crypto market, to be fair now. I cashed a lot of it in for other reasons. I'm not getting into my finances because I bloody hate people probing around in money that was offshore, and I was offshore with it, but it gets into a weird place where they're going, well, can you prove? I wasn't bloody here for 12 years. But the point being is, I've done this before with much smaller numbers in a much more volatile system. Doesn't mean my picks are always right. I lost money. It's quite funny when you get people go, you lost money. They forget I only put $400 in. Most I've lost in a day is probably a couple of thousand. But at the same time, in the volatile markets, I take out the ROI, return on investment. So I take out my initial, so that once I've got my initial back, everything else is profit or loss. Because I can't lose more. I'm not gambling on the margin. Gambling? Yeah, I call it gambling because if it's money I haven't got, then shock horror. It's money I haven't got. I'm not leveraging money I don't have. So the point being is, the opportunities are there. The crypto markets I'm not doing because they're too volatile for a lot of you guys, and I don't think it's fair to sort of drag some of you guys into that type of stuff, because I can't guarantee you're going to do okay. With these, although I'm not guaranteeing it, I'd say it's a slower growth. Historically, it's always done well. So I'd say there's more chance of it working than not working. Doesn't mean get into the penny stocks either. As I say, a lot of this stuff out there is fictitious, fantasy. Done with the right reasons, but with the wrong deliverables. So if you're getting 4 million quid, by Friday they'll have £1. Also, there's a lot of people got into the startup funds and all this sort of stuff because they're seeing it as an easy path to get money to try and do something. I like things to track records. See, it's like Steve Jobs. I don't see him as an engineer. I see him as a salesperson. So for me, if I'd met him face to face and seen his direction and whatever, I would know where he's coming from. In the same way, I deal with people that are very, very, very good engineers, and I wouldn't buy products from them because they're terrible at selling them, because they sell to other engineers. That's not your buyer. Your buyer is either business orientated or an end customer. Business orientation, like the Nvidia one. The reality is, Nvidia is selling the tech. ChatGPT could disappear by the wayside overnight, OpenAI, because the technology is in coding. Coding can be moonshot in no time, can be superseded in no time. I mean, you think back where we went from DOS, the old CLI, command line interface, to your first versions of Windows, to your Commodore Amiga, alongside your IBM and an Apple, and how that market has sort of done this, yet the ones that have stayed, Microsoft and Apple. Because Microsoft seem to try and deliver for a lot of people that don't seem to move on tech, while Apple seems to be consistently looking at minor improvements. I do find Apple's a lot more focused on end user, and a lot of the end users aren't the smartest people in the book. This is why you get the Android people saying how stupid Apple people are when it comes to the iPhone. Because, I mean, I've got both here. I've got an iPhone for work, and I hate it. I just find it too simplistic. I find I can do a lot more with the Android. But two different user groups, completely different user groups. So when you're looking at things, you've got to understand, why are people doing this? So when somebody says, I've had a fantastic idea, I'm going to do sustainable housing in the Amazon, whatever they're doing, the first question is why? Why? Because if it's a passion, it's great to have a passion, but it's got to be having something behind it. You know, an example that was logical was a guy when my dad was in the forces. He knew how to make money out of anything. So they're at a camp, so they're out on a military exercise, and they've got a big generator on the back of their vehicle, and they see that the canteen is on the top of a hill. Now these guys have been out doing whatever they're doing all day. You've got infantry units, mechanical unit, all sorts mixed together, and then the canteen's at the top of the hill. My dad's unit is based at the bottom of the hill. What does the guy do? Him and my father went into the town, bought loads of loaves of bread, bacon and eggs, and just sold bacon and egg butters at the bottom of the hill, and people just bought them off them to save going up to the top of the hill. That guy knew how many slices of bread were in every loaf. He knew how many. He could tell you how to squeeze a penny out of anything. Where he is today, I very much doubt he's not a millionaire, because he just knew how to do it. He seen the opportunity, he just grabbed it and went with it. Don't get me wrong, I'm not supposed to be cooking in those vehicles, but they did it. They did it as a sideline. And with people like that, they will always find money. But those guys are unicorns. But when you meet one, don't matter where they are, they'll do well. I've tried to be like that. I'm not as good as that guy ever was. You know, he just was naturally very good. And on top of that, he had the gift of the gab, and it didn't matter what it was. He could sell anything. But my point being is, when you're picking what you want to trade in, what you're looking at, we can have these discussions as well. So I may pick out some of the stocks and we can look at them and see what we can see in it and see what we understand about it before we stick any money in it. At the moment, we've got to get these two further up. So we nearly got 1,000 in there. So I've got to get these. I want to get these to 500. Let's call these 500 for now. I want to get these to 500 before Christmas. After that, it'll be a bit slower going forward. And one thing I want to leave you with, which YouTube never seems to understand, everything takes time. This is why I'm doing these videos. We're in the first month. I don't expect to make any money in the first month, yet we're about £14-20 ahead. But everything takes time. In stocks and shares, it's compounding. If I suddenly got a good win on the risk, there'd be very little money in it anyway. It might go, oh, you had £20, it's now worth £2,000. but I still haven't front loaded these, which means we didn't really jump that far. Time. Don't get disheartened because things are slow. As I just seen with my wife, just putting that €30 into an account, and I'll keep sticking €30 a month in there now. Each changed her perspective on money because she's now seeing that fund is growing at whatever percentage it is a month. Overall, it'll be about 10 to 13% a year, I suspect. But the point being is, you can monitor it. It's going in there. So you made some money this month. Well done. Which then makes you go, I'm going to stick an extra 20 quid in there myself. Hence, these are 1,000. We'll get there. And I want to show this. This is why I set mine fairly high, because it's not a lot of money, but it's a bloody lot of money to me at the minute because I've got a lot of bills. But I want to show it's possible. So you may want to do it at 100 each, or 50 each, or just want to stick it all in one fund and just add 50 quid a month. That's what I'm looking for, guys. If you're doing that, I'm happy, because you've taken the first steps and moving forward. But anyway, I'm not your financial advisor. I'm just trying to make life easier for everybody. If I can do that, I'm happy. And I find this stuff works. I can't grumble. I mean, I look at my life and I do sit back sometimes and think, my wife said it to me yesterday, actually. Was it yesterday or Friday? She says, you're your worst critic, because you look back at where we've come and how far forward we've come. And I still don't think I'm achieving anything. And my wife sits there and goes, well, you've got property in the Philippines, you've got property in Spain, you've got investments, you got your pensions nearly there. You're looking at other opportunities, because once I get this moving, there's other stuff coming, which is buying other businesses, and I'm seriously looking at other ways to generate money in La Mata in Spain. I think the rents are overpriced for where it is, but I've got to have a serious think, because we were looking at buying a laundrette, because I'd like to get into some of the coin operating businesses, automated industries. But we'll see. Still early days. Let's start with this. As I said, I'm starting to move forward again. I did mention this, and this is the bit that some of you guys may not understand if you've not followed me for too long. My whole plans were royally foobarred, because I had my father-in-law die, both my parents die. Typhoon took the roof off one of my properties in the Philippines. Had to buy the house in Spain. Had COVID come along, and then I've hammered the costs of the house in Spain to get the mortgage down, plus about 50 grand in renovations. See, so the property's worth 220,000. I spent 50 grand in renovations. This puts it at 185 total cost for the actual purchase and renovations. But it's my house. I'm living there. If I was buying it to flip it, I would not have renovated it. I would definitely want to pay builders to do it anyway. I would have done it myself. But the point being here is, every now and again it does that. Your life does that. It's not a hamster wheel. It does that. It judders. Somebody sticks a big stick in the side of it. You fall over and you have to get back up, dust yourself off and get going again. We're now at a point where I can start moving forward again. So I do want to say, time. That's took me about 6 years. That's took 6 years to sort all that out. So if you're struggling now, just remember, everything's temporary. Everything's temporary. And if I look scruffy today, by the way, it's because it's Sunday. On a Sunday, I try and leave shaving till later on in the day, simply because I think it's better for my skin. So I've been told. But anyway, that's me. That's enough. It's an hour. See you later.